Good day, everyone. Welcome to this week's Business and Investment Tips program, a production of Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the review of Nigeria's Q2 2022 foreign trade numbers. Last week, the National Bureau of Statistics, NBS, published Nigeria's second quarter 2022, that is from April to June, foreign trade numbers, which showed that total foreign trade declined by 1.23% or 159.7 billion naira quarter-on-quarter to 12.8 trillion naira relative to 13 trillion naira in the previous quarter, Q1 2022, but increased 32.2% year-on-year or 3.1 trillion naira when compared to Q2 2021. Cumulatively, Nigeria's total foreign trade for the first 6 months of 2022 stood at 25.8 trillion naira. That is 47.1% higher year-on-year. Foreign trade is all about imports and exports. Foreign trade is the exchange of capital, goods, and services across the international borders or territories. All countries need goods and services to satisfy the wants of their people, and no country can produce all the goods and services that it needs. The country has to buy from other countries when it cannot produce or does not produce enough of, and sells to other countries the goods it has in surplus quantities. Based on the report, total imports came in at 5.4 trillion naira in Q2 2022, a 7.9% quarter-on-quarter decline compared to 5.9 trillion naira recorded in Q1 2022. However, total imports increased by 15.8% year-on-year when compared to 4.7 trillion naira recorded in Q2 2021. The growth in imports in Q2 2022 can be linked to the increase in the importation of mineral products and chemicals, as well as machinery and appliances. The exchange rate depreciation from about 409 naira to $1 in June 2021 to 415 naira to $1 as of the end of June 2022 also contributed to the expansion in import value. Total exports rose 4.3% quarter-on-quarter to 7.4 trillion naira in Q2 2022, compared to 7.1 trillion naira recorded in Q1 2022, and up 47.5% year-on-year from 5 trillion naira recorded in Q2 2021. Crude oil accounted for 79.8% of total exports in Q2 2022. This can be attributed to the rise in crude oil prices despite low oil production due to oil theft and reduced investment in the sector. The depreciation of the naira also offsets the impact of Nigeria's low oil production. Exports account for 57.7% of total trade, while imports constitute 42.3%. Nigeria's trade balance was positive. That is, the exports exceeded imports at 2 trillion naira in Q2 2022, more than 5 times the positive trade balance of 327 billion in Q2 2021. This just means that Nigeria's exports are greater than its imports, hence recording a trade surplus. This should be positive for the exchange rate. However, the current FX liquidity management strategy of the CBN is impacting the exchange rate. The top 5 trade destinations in Q2 2022 for export trading partners was 1. India 14.9% or 1.1 trillion naira. 2. Spain 14% or 1 trillion naira. 3. Netherlands 12.4% or 914 billion naira. 4. US 8.9% or 661.2 billion naira. And Indonesia 5. 8.4% or 625 billion naira. Import trading partners include 1. China 26% or 1.4 trillion naira. 2. Belgium 8.6% or 465.2 billion naira. 3. India 8.5% or 459.2 billion naira. 4. Netherlands 7.9% of 430.8 billion naira. And 5. US 6.7% or 362.9 billion naira. Our thoughts. The share of manufacturing and agricultural products to total exports at 1.6% and 1.9% respectively in Q2 2022 remains concerning, with the share of oil-related products at 90.9%. This explains why Nigeria continues to experience unending currency depreciation. 2. To improve non-oil exports, the government should prioritize subsidizing production than consumption to grow Nigeria's share of exports to diversify its FX sources. 3. Additionally, Deliberate efforts in adding value to our abundant resources are also important to earn more value from our exports than exporting raw materials and importing finished goods. 4. A comprehensive industrialization policy should be developed to provide more clarity on how the federal government plans to support manufacturing sector businesses. 5. Remarkably, robust infrastructure, adequate power supply, and consistent policy in terms of trade, fiscal, and monetary direction should be given more priority. 6. Definitely, the support of the private sector is required to put these in place as government revenue continues to come under significant pressure. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 0708 246 3747. Stay blessed.